Welcome to the 10-minute bookkeeping sheet. My name is Dan Mullen. I'm a CPA, and I am the architect of this spreadsheet. I hope it helps. I hope it makes things super easy for you, and it's better than whatever other system you're using, and it's simpler, and it takes you less time. I named it the 10-minute bookkeeping sheet because for most real estate agents I've encountered, and I've taught them how to use this, it has taken them literally 10 minutes a month. So I've got the instructions here. I'm assuming you have enabled macros and unzipped the file. If you haven't done that yet, I strongly suggest that you go and watch that video to understand how to unzip and enable macros, because this workbook will not work without those two things, okay? So make sure you do that. So now we're in the instructions tab. I'm assuming you've opened the file and you have instructions that you can read if you want to. If you would prefer to do that, I also have the video. Here's the link to this very video right here, of course. So let's get into the next part. Here is our reference, our common deductions. Now, this isn't exhaustive, of course. There's no way I could build an exhaustive list of everything possible that somebody could write off in their business, because every business is different. But these are some really common ones I've seen. That should get you like 95% of the way for most people. So got a lot of things here. You'll notice the stuff in bold are the categories, and the stuff that is not bolded are the things that reside within that category. Now, I'll tell you what to do later in the workbook. If there's something that doesn't fit in one of these categories very cleanly, there's a way to record that, of course. So don't worry if there's something in here doesn't really fit what you're trying to do. So we've got, remember, you've got some little flags over here too. You'll see these little red triangles in the corner that if you hover over them, it gives you a little bit of extra information. Home office has one. There's a few that have one. Auto, depreciation, licenses, registration, all that kind of stuff. Meals, how to do that, just keep you in line, help give you some more information on how to deduct those, and if you can deduct those kinds of things. Utilities, uniforms, travel, there's a lot there, of course, and how to keep yourself compliant with the IRS, and how to write off some of your business travel and turn some of your vacation travel with something like a board meeting with your family, how to do that successfully and pass an audit if you had to do that. So again, here's your worksheet, your reference, your common deductions sheet, just to give you an idea of what kinds of things fall in which categories. Next, I'm going to show you the worksheet. That's where we're going to do most of our work. The first thing you're going to want to do is name this whatever your real estate company is. I have very creatively named this real estate company, ABC Real Estate. It's not a real company, of course, but just for example's sake, that's what I've got here. So up here, you're going to have your beginning bank balance. Now, ideally, how you do this is you have your bank statement either printed out on paper next to you on the desk or on another monitor if you're using one of those in the digital age. That's a great way to do that. At the top of that bank statement, it's going to have a beginning bank balance on there. Okay, and I'm going to assume that we're at just $1,000 here. Okay, 1000. That's it. Okay. And notice the ending bank balance automatically calculates. You'll see that update as we add transactions throughout the month. You'll just be able to see that it automatically adds up, okay? The home office little calculator here, this doesn't enter anything automatically for you. This is just to help you understand how much of a certain expense, like your utility bill, for example. If you have a home office, you can deduct a piece of your utility bill, okay? And here's how you calculate how much of that you can take. So let's have your home office square footage, get out your tape measure, or if you already know how much square footage your office is, you do that. Let's say it's 150 square feet, okay, on a 2,500 square foot home total. So therefore you can write off 6% of utility expenses, okay? Don't try to play games with the home office square foot. Don't try to write off your entire living room or your entire kitchen. It's that space has to be used exclusively as a home office, so don't try to get too creative with that. The IRS doesn't really like that. They might penalize you, right? So, but take advantage of what you can here. So let's say you did that 6%. So that means if you put something in here, let's say you had a $150 utility bill, that means you can write off $9 of that for that month, okay? That doesn't enter anything down here. This is just a little helpful tool that you can use to help you understand how much of a home office deduction you can take for certain things like utilities, okay? Now let's get into the meat of it. If you're starting a new month, you will hit this clear worksheet button. I'll get into that later when we actually do. I'll talk about these other two buttons as well when we get there, but let's start on what these categories are first. Over on the left-hand side, you see the categories. These are also found in the reference to common deductions tab over here, but these are generally the categories that when you're doing accounting, when you're trying to do your tax return, that your accountant is going to want to see. Those are the main categories. Now, if you have something that doesn't really fit in here, and I'll give you an example in a few minutes here, you add an other expense here, and I'll show you how to do that. So if you feel like you have something that you bought for your business, you know it's a business expense, but it doesn't quite fit exactly in one of these, there's a way to deal with that, okay? So let's just get started. Okay, again, we are referencing our business bank statement, whether it's on another screen or on the desk next to us, and we just go down line by line. So our first one, I'm going to make one up, of course. I'm not looking at any bank statement, but you get the idea, right? Let's start out with the sale. Let's start with some revenue right there. Everybody likes that. Let's call it $10,000. $10,000. Okay, you'll notice I have inflows and outflows column, and I put this in the inflows column. Well, Dan, why didn't you call it income and expenses? Well, because not every dollar that comes into your business is income, nor is every dollar that leaves your business an expense, right? For example, if you need to fund your business at the beginning of your startup, you're putting money in from your personal account into your business account. That's not revenue. It's not going to be taxed. It shouldn't be taxed. You don't want to tell somebody that that's revenue because it will be taxed. So that's why I call these two columns inflows and outflows. Okay. By the same vein, if you take a distribution, you take money out of the business to spend on personal expenses. You're allowed to do that. That's why we're all in business, right? When you do that, when you take money out of it, you count that as a distribution. That doesn't have a tax effect normally, so we're not going to worry about that becoming an expense. So that's why we call it an outflow and an inflow rather than income and expense here, okay? So inflows and outflows. So let's say the next one we've got, let's pay our accountant. We like getting paid. That's an outflow. Let's call it minus $200. Cool. All right. Accounting expense. Great. Now, you notice I put a minus sign in front of that. If I put a positive sign, if I just put 200 there, it's going to give me an error. It's going to say, hey, only negative amounts are allowed in this column. I programmed that in as a guide rail to help you recognize that, yeah, money is leaving my account. Let's make it extra obvious by requiring a minus sign there. There we go. So I go minus 200. Okay, great. Now you notice this error check column over here. If you try to put something double in here, let's say, okay, I want to put an advertising expense in there. Maybe I bought some, I don't know, maybe I made some flyers or something like that for an open house, or I bought some Facebook or Meta or Google ads, something like that, and I wanted to spend, or I spent $50 on that. If I try to put that up here as well, it's going to say, hey, don't put two items in a single row here. So it's going to give me an error. Don't do that, okay? So just another guardrail to help keep you from inputting it wrong. So advertising. So let's say that was a $50 expense. So minus 50. There we go. And let's pay our janitors. I think if their janitors when all went on strike, the world would pretty much catch on fire, right? So let's pay them. Let's say $250. Maybe you had some deep cleaning done. I don't know. So janitorial. Okay, let's do some of the more interesting ones now. So let's say you had something that didn't really fit in here as an expense. Like, hey, I'll give you an example. So the other day I had to take a piece of furniture from my office and I had to take it to the landfill. And there's a fee to get into the landfill and dump stuff. It was a $10 fee. It was definitely a business expense because it was from my home office. So I didn't really know. I could have put it in office expense, maybe office supplies and expenses, but I'm just going to do this instead. I'm going to call it an other expense. Okay, so enter a description of the expense. I'm going to just put landfill. Okay, and enter the amount of an expense as a negative number, minus 10. So it was a $10 fee there. Okay. You'll see, again, you don't want to put it here manually. You have to hit the button because it won't count as another expense in here. Now, why do we need other expenses? Why do we need to tell what it is? Well, the IRS needs to know, your accountant needs to know that, so they know that you're not baking a bunch of personal expenses in there. I've seen this before where we have somebody has miscellaneous expenses of like $30,000 or $40,000 when they made $70,000 for the year. Turns out that was a purely personal vacation. It didn't really count when we dug into it. So yeah, when you have other expenses, that's how you do it. Don't just put other expenses here. Use the add other expense button to record that, to make everything crystal clear for your accountant and for the IRS who needs to see that. Okay. So let's say you have to pay your transaction coordinator or a photographer or a handyman, someone like that who you pay and might have a chance of issuing a 1099. I'll get there in a minute when you need to issue one of those. But let's say you pay somebody for their services. Let's call it a photographer here. So let's add a contractor expense. I know the word contractor in layman's terms means somebody who works on, renovates or builds houses, but I'm talking about somebody who is not your explicit employee that you don't issue a W-2 to, but you pay for their services. Okay, so let's add a contractor expense. It's going to say, okay, enter that contractor's name or company. Let's call it Phil Photographer. Okay. And how much should you pay this photographer? Let's call it $300. Let's put it as a negative expense there, a negative number. Okay, cool. You see contract labor there, and then you see it in the 1099 tab of somebody you've paid. Okay. I'll get into there later about 1099s and other expenses in a minute, but let's just say that that's how we enter them when we find them on our bank statement. Okay. Now let's do these other two kind of interesting ones, contributions from owner and distributions to owner. Now, when you add money to the business, let's say you have something coming up and you need to put more money from your personal account into the business account, that's going to be a contribution from owner. So what you're going to do is you're going to call it contributions from owner. Scroll down there. Again, that is an inflow. It's not income. You're not going to be taxed on it. So it is an inflow. Let's say you want to put $5,000 in there because maybe you're going to throw a huge party, a huge client appreciation event. You're going to be the one funding it. We need a bunch of money in there, so let's put $5,000 in there. Okay. So the next day, you find out it gets canceled for whatever reason, and you want to do a distributions to owner. Now, it's fine to take money from your business and put it in your personal bank account. You can pretty much do that whenever you want to. That's not really a tax thing. There's a basis aspect in there if you're an S-Corp, but don't worry about that right now. If you take money out of your business bank account and put it into your personal account, that's called a distribution to the owner. That's for, you make money in the business, you want to spend it on personal things like vacations and groceries and makeovers and your kids' piano lessons and all that kind of stuff. Yeah, that's what we're in business for, to make money to use for our personal lives. So a personal distribution, a draw to an owner. Let's say we want to take $11,000 out of that and put it in our personal bank account. Again, that doesn't have a tax effect. It's not an expense. We're just taking it out of our business pocket and putting it in our personal pocket. Our wealth doesn't change, right? So we have a outflow. Let's call $11,000. So negative 11,000. Okay. Now we've got it. Again, as you're looking at your bank statement, all you do is go line by line. Once you do this once or twice, it'll come really, really quickly. It will take you literally 10 minutes a month for most of you. It's pretty slick. So let's call that our month. Let's say that was it. We don't have to copy and paste anything. All we have to do is hit this button over here, record to January, assuming it was January. So let's go ahead and do that. You'll notice the tab down here turned green, meaning that you completed that month. So let's go check it out. January, we have make a correction here if you want to, but let's admire our work here. Yes, everything came over. Of course it did. It's programmed to do that. Now, if you need to make a correction in here, you go ahead and do that. You hit this button over here and you click the category that you'd like to correct, and it's got to be a valid category. So if you click over in this cell, hey, I just want to add expenses, it'll be like, nope, you can't really do that. You have to click a cell containing an actual category. So let's try again. Let's make a correction here. Let's say I forgot to pay my NAR dues, and here it is. So here's our dues and subscriptions. There's the category. Okay, how much is it? Negative numbers increase your expense and lower revenues, and vice versa. Say we forgot to pay it, so let's do, MLS dues or something like that. Let's call it $950, negative number. Okay, updated the amount. All right, there we go. So there we go. All right. I'm actually going to correct that out just for now, just to show that you can take stuff out too. So make a correction. Where is it going to be? Dues and subscriptions right here. I'm going to click that category. How much is it? Well, I'm going to have a positive number in here because I'm erasing a negative number. That makes sense, right? So 950. Okay, there it is. It's gone. Cool. All right, there it is. There's our January. So let's move on. I'll do the next month with like 3 transactions because I want to show you what happens after that with year to date and some of the tax estimator things, which are really awesome. So now we have a new month. What do? Let's clear it out. Okay, well, let's clear all this out. And if you want to carry the ending balance from last month's bank balance to the beginning balance of the next month's bank balance, this will clear that out and carry the balance over. So let's hit that. Are you sure you want to do that? Okay, so you'll see 4190 was the ending balance of last month. It is now the beginning balance. If that's wrong, you look at your bank statement and it's a little bit off. Put in what's on your beginning bank balance on your bank statement here, okay? So you could change that if you wanted to, but I'm not going to. All right, so 4190 there. And let's just do 3 transactions. Okay, let's have some revenue. We like doing that. Let's call this a little bigger one. Let's do 20,000 here. Cool, 20,000. Okay, and let's pay your account again. I don't know why I'm such a big fan of that. All right, let's do a little less this time, just $100 this time. Okay, and one more. Let's do a different one, meals expense. Okay, we had a business meal. We ate with somebody. We talked about business. We kept the receipt. That's a business meal, okay? So let's call that minus $40. All right, cool. All right, let's say that was our February. I know there's probably gonna be more, whatever. What do? We go over to record to February. Boom, let's click that. You'll see the tab turn green, meaning you did it. Okay, and now we can look at the year to date. Okay, if you've done all 12 months, this will include January through December. But as it stands, you have a year to date profit and loss statement. There you go. It's already done for you. Okay, it's all there. It's got everything added up. Yeah, $30,000 worth of commissions in there. That added up everything from every single month in every category, right? So we've got accounting is in there. Yep, 300, contract labor, all that kind of stuff. Now, when you're ready to give your documents to your tax preparer, you hit this print documents for tax preparation button. Okay, here's what happens. Are you sure it's going to actually print 3 items? And I'm going to talk about the 3 items it prints, okay? So first it's going to print this sheet right here, this profit and loss. And I'm going to go ahead and send this to my printer. You can do it as a PDF. If you want to save it to a PDF, that's fine. Okay, so I'm going to send that to a printer. Next, it's going to come to another one. It's going to print your contract labor. Now, I told you I was going to talk about 1099s. Remember we had Phil Photographer here, and we paid him $300. If you end up paying Phil at least $300 more, that's going to be a $600 total you pay him or more. If you pay a contract laborer at least $600, you're supposed to issue that person a 1099. Okay. If you don't know how to do that, your accountant does, it's okay. But what you need to do is provide your accountant with a list of people you need to give 1099s to. Usually you will want to have their name and address and social too. You have to issue them a W-9 as you pay them. But this is a great way to get that list of people you need to give 1099s to, is you're already doing it throughout your bookkeeping every single month. Okay. So I'm going to send that to my printer as well. I could have saved it as a PDF. You can do that if you want to, if you're in the digital age, right? So now the third one it's going to print is your other expenses. Of course, I told you your accountant and the IRS need to know what those other expenses are. It's going to give you a nice printout of the other expenses, okay? The list and the amounts of exactly how much you need there, okay? So I'm going to send that to my printer. Okay, great. All right, now back to the year to date. Yeah, it's going to give you those nice documents. All you got to do is hand those 3 documents to your accountant, your tax preparer, and they are going to love you because you're so organized. You're on top of it. Now, let's talk about this powerful little thing called the tax estimator. I've never seen another bookkeeping software do this. So we have a tax estimator now. Let me walk through this. So you put your filing status in there as of December 31st. Were you single or married or one of those? If you're not sure, ask your accountant what filing status you are. If you're married, usually you want to file married filing jointly. If you're single, you usually just want to file single. If you have kids and maybe you're divorced and you have kids living with you or dependents, and you're not married, you usually want to file as head of household in there. Have that discussion with your accountant if you're not sure, okay? But let's assume I am single here. I'm not. I love you, wife. So, are you taxed as an S corp? If you don't know what that is, put no. If you do, put yes, of course. I'm going to put no for now to keep this simple. Salary is just that opens up if you are an S corp, for example. And again, if you don't know what that is, have that discussion with your accountant. S corps are awesome. I'm a big fan of those. If you're making a certain amount of profits, then they're a great idea. Have that discussion with your accountant. You can call me about it. Great. So I'm going to go back to no here. So, all right. So we have no. So here's your annualized planning. So this is your total income up through, looks like we've gotten through February, right? See, last month completed, February, right here. It's going to tell you. Okay. And then you're going to have your income. Here's how much income you made. Here's how much your total expenses were. Again, whatever that's going to end up being for your bookkeeping that you've already done, it's going to be here. Okay, now you have annualized planning. This is a nice, useful tool to help you understand, okay, if I keep doing how I'm doing for the rest of the year, whether that's in January or February or in November or December even, hey, I've completed my year, about how much in taxes should I expect to pay? This is the perfect tool for that. And it's really accurate. It goes through all this stuff. If you don't know what some of these terms mean, don't worry about it. But this is for self-employed people. And I am a CPA. I figured this out exactly pretty much what's going to happen there. So what I don't have here is things like child tax credit. Some other credits, I don't account for that. This is just accounting for the money that you made in the business that year, okay? I couldn't possibly go through all the scenarios like, hey, I got a solar credit. I can't possibly do that. So I'm just doing the effect of the money you made in this business. What's that going to do to your taxes? How much are you going to expect to owe, okay? So I have that here. You're going to have income taxes, total projected estimated taxes. You've got self-employed taxes in here. You have income taxes in here. Here's a total of those. And then projected quarterly tax due is going to be right there. You even have a tracker right here if you want. Your quarterly payments are due if you're doing those, and you should because you're being penalized if you're not. Your quarterly payments are due April 15th, June, September, and January 15th of the following year for the money you made in the previous year. So April 15th is everything you made in the first quarter. June 15th is for the next portion. September and January, I think you guys get the idea. You can put it here, how much you've paid, and then underpaid, overpaid is based on those numbers compared to this. So let's say we paid some money to April. We prepaid some quarterly taxes here. Let's say we paid $10,000. Okay, so the amount underpaid according to what we've already made is going to be that. So we have a good tax estimation now. I'm trying to help you avoid the April surprise when you get a surprise tax bill and like, oh, I hope I don't owe too much. If you're doing that, this is going to help you really understand what those estimates are and keep you on track so you're not as surprised and you can pay these early. Okay, so you can plan your trips and do so stress-free. So that is my 10-minute bookkeeping sheet. I hope you enjoy this. I hope this makes things vastly easy for you. It's a lot cheaper than a QuickBooks subscription, and I think it's a heck of a lot easier to use. You don't have to have an accounting degree to use this because I've just shown you how to do this in 24 minutes. So I hope that's useful. Hit me up if you have a question. Pop me an email at dan@gyfst.net. Bye for now.